Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, September the 9th. The year's 2019. Let's talk trading. The simplest trading method. I just watched somebody else's trading video that talked about the simplest trading method. I kind of laugh, one, because he got one part right, used the horizontal line, but the rest of it kind of left a few things to be desired in my humble opinion. Um, one of the things that salespeople learn is how to sell based on emotion. And if you can relate to the prospect, the client, the customer, if you can relate to their problem, then you'll be able to sell them. In other words, if the customer comes in and tells you they have this problem, like in this case, hey, I'm losing when I trade, can you help me? It's like, oh yeah. And when you put your trade on, this happens, right? And it just, yeah. And then, and then you wind up losing this money because of your position size. Yeah. And so, well, guess what? Step right up. I've got this bottle of snake oil that's going to fix all your trading problems. And then they buy it. They give it a fancy name, put some eye-catching graphics on the chart, and oh yeah, there's an arrow that tells me when to buy and an arrow that tells me when to sell and another. Oh, you gotta laugh at that stuff. But the fact of the matter is, trading is simple. It really is. Um, Remember, the first thing you have to have under control is your risk and your money management, because that way, no matter what happens, you're only going to lose a certain amount per trade. So that's part of what I call the three-legged stool of trading. Okay, so another leg is the method that you pick. It doesn't matter. You can even pick a squiggly line method. Um, but you pick that method, and that's part of it. Now the last part, that's you, how you execute and how you perform. It's all on you. It's your psychology. In fact, I was talking with a trader over the weekend, and we had a nice long conversation. And he actually has a winning system. Most traders who I get in contact with, they're not doing that well. But this guy has a winning. I told him, don't change a thing, not one thing. You just keep doing it. Just keep doing it over and over and over again until it stops working. I mean, because he was making a really nice return, daily return, weekly return. So I said, no, do not change one thing. I had to, actually get a little explicit with him and don't F with it because he kept trying to and I just said, no, don't. So, simple method, simple method, okay? Once again, your risk, the amount you're willing to lose per trade. And I start off every video just about practically with that because these videos are for educational purposes only, and your results may differ from mine. And trading is very, very, very risky, okay? And that's why we use stop losses. And it's best to seek advice from an accredited financial professional rather than some Yahoo on YouTube, right? Okay, now that we got that out of the way, there's only one pair that hasn't filled the gap. So yesterday I put up a video early. There was plenty gaps remaining to be filled. I hope some of you took advantage of that. If not, don't blame me. It's on you. I can only show you the way. In fact, somebody said I was a good teacher. I go, no, I'm not a teacher. I'm a guide. You see, there are teachers, there are coaches and guides, and so I fall into the guide or coach class because I don't teach you trading. I guide you. You learn trading on your own. I just, share a few methods with you. You pick one, you practice it, and either you master it or you don't. I mean, it's kind of like I can't teach you how to hit a baseball. I can show you, I can guide you, but you're going to learn how to hit that ball through practice. And here we have the weekly chart on the dollar yen, and you see we're clearly in that upper wick zone right here. We had a gap down, so of course jump in, and now if you jumped in right there on that gap, you'd be up about 30 some pips. Still only 42 pips on the day, so we're nothing to write home about, but price is moving in the proper direction. In fact, I punched out of my euro yen trade too early. I think I've left about 30 pips on the table as we speak, because that one, I do believe that one also was a gap down. And, that's one of my favorite pairs to trade. Right here, it was a gap down, but I jumped out a little on the early side. That was on me. For the year, we're still 253 pips below the open on the yen. And here we're still putting in the first day of the week range here. Here was the first day of the month, and you can see we popped out there. And I'm going to go over this a little more because I talked about it some yesterday, and I may have confused a few people. We're above the September open, but below the rest. And the opening range, we're below the rest, getting close here though. And you can see we had an inside bar and we broke out, but we're only 2 pips above, but there was about 8 pips to be had. So once again, the inside bar proved to be profitable, even if you just grab a pip or two. And you can see here, it's pretty much the same on the range. 1, 2, 3, 4, 5, 6, 7, over 100. And this range is important, and I'm going to show you that once again today, because that's what I base everything on, is range. Price has to move. You can see right here, we just put in the H1 highest open for the month, and price is coming down. So you might be up a few pips if you're riding that back down. So, we got range and we have statistics of price movement. In fact, there was somebody on one of the forums posted a pretty nice chart using some of my indicators, had the dashboard, had the price analyzer, had the pivots. I mean, all on one chart. I said he must have a 60-inch monitor because I'm just using a laptop and I can't fit all that on one screen. Okay, as I said yesterday, the pivot was between the buy zone sell zone. So right here, you just faded the gap, and you can see price is still on the upside. Rat zone, there's not much separation, but you can still trade out. In fact, I told one trader who was talking about the rat zone, what's the best time frame? I said, use the 1 hour chart. You can see here, using the 1 hour chart can still be profitable. Just trade with that 1 hour candle color. And the pivots, once again, we've got the weekly pivot down here. And I do believe we've already taken out the monthly pivot. And you can see here we hit that pivot. So here's a pivot that needs to be hit, and here's a pivot that needs to be hit on the daily chart. And it's just a matter of waiting. Price action, 2 ball at the top, pro trade red at the line. You can also use that wick zone breakout right here, or the top scrape going back into the previous candle's wick zone. And speaking of wick zones, you can see in and out, and then coming back in. So if you took this long, this is where you should have at least taken profit, and possibly you may have wanted to take profit right here when price broke below the previous candle's high. And sometimes it'll do that, reverse and take off, but you know what? That's just trading. That's okay. That's why you don't have to exit your full position. You can exit part of the position and take some profit. And here you see once again using the daily, weekly, monthly, previous daily, weekly, monthly, open, high, and low as places to place trades. Since I switched pairs, you can see here that there haven't been on this chart long enough, and ditto here, haven't been on this chart long enough. But the chart I wanted to talk about was this one. Okay, we talked about it yesterday. Here we have the ATR zones for the day. Here we have the ATR zones for the week. Here we have the opening range. Now, why are we talking about this? Well, we have an average daily range, okay, and which we're way below it at the moment, okay, but we also have a weekly range, and once again, we're way below it. So what has to happen is after this first day, we still have the range on the week, and that's why if you use these as breakouts, the opening day of the week, usually Monday, first trading day of the week, you can get the breakout on Tuesday, Wednesday, Thursday, or Friday. And we'll just look at this chart every day and you'll see. Of course, the daily ATR zones will change based on the open and based on the high and low. Okay, so actually it's based on the open. Here we have the range open plus the ATR 12, which was the max, plus the ATR 2, which was the min. So right there, that's why it plots it. And then here we have the weekly. The minimum was the ATR 2, and the max was the ATR 7. So if you think about it, the weekly range can't fit in the opening, usually cannot fit in the opening day range. So this is almost like a buy zone for daily, in the sense we're using that opening day, the first trading day of the week, we're using that range as where price has to break out. I hope that makes it clear. Once again, so if we have whatever today's opening range is, that's 41, well, the average here is 134. Price has to break out. Do you think price is going to stay within that the whole week? No. This is why this is such a great method and simple method. You just take that opening range. Now, the same thing's true with the buy zone. Price can't stay within those 20 pips on the daily because the average is 82, and see, we already hit 41. It has to go beyond it. There's just no way it can't. Let's see, if I can remember where the buy zone chart is amongst these. It's somewhere here. Right here. So once again, we've got the open plus 10, open minus 10. Price has to range outside of that. So you can do the buy zone just off of the open. You can use the opening days range, the first trading day of the week's range when you come back Tuesday through Friday and trade. It's real simple when you see these things. And you just know that, hey, based on statistics, price has to move. Yes, sometimes it'll move up, hit the point and reverse, and other times it will move down, hit the point and reverse, but that's just trading. And that's why we use our stop loss. It's real simple because over time you should have a lot more winners than losers, okay? If you place your stops and position size accordingly. And in fact, somebody asked me about the Dragon Money Management and what were the multipliers. You have to go out where that code was posted. It's been, a decade since we've been doing that. But basically, Dragon said he's not going to lose 20 times in a row, so he was risking about 5% per trade. He had confidence, and he made a lot of money doing it. So, but I don't suggest you do it. I suggest you say within 1% or 0.5%, depending on your account. So maybe you can lose up to 100 times versus 20. But remember, traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you haven't subscribed, subscribe and hit the bell to get notified when new videos are out.